Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Hopefully everybody having a vainglorious day. I'm dog tired. I was ripping and running all day yesterday. I jollipies for not streaming last night. I was ripping and running some today. I was doing some work around the house today. Whenever y'all see me in the Jake from State Farm uniform, y'all know I've been getting it in. All right, so I'm oh, sorry, my son just went outside. I'm like, I saw a shadow like somebody was at the door, but it was my son going outside. Then of course he didn't shut the door. So the door just opened. No, we stay in the hood. Alright, I'm back, y'all. Anyway, we here, man. Not gonna be before you long tonight, man. I still got a lot of stuff to do, but we gonna get into it anyway. Y'all do me a favor, man. Hit a like for the algorithm if you ain't subscribed to the channel. And I thank you. Give yourself a round of applause for tuning in, man. Shout out to everybody that's tuning in. Good evening. First of all, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, no, I'm not Jake from State Farm. I'm Timothy Leroy Sr., a.k.a. Aranya Grande. You see it up there behind me. That just means Big Spot if you don't hablo Espanol. And you in tune to another episode of the Intraday Price Action Recap. Yeah, man. What's going on, everybody, man? Shout out to everybody that pulled up, man. I see Honey. What's going on? We got Honey over there. It's Simple MR. I've never seen that name before. If I did see it before and I said that before, I'm sorry. 53, man. 53. That's my first time seeing that name, man. But, hey, welcome. Do me a favor. If you're not subscribed to the channel, please subscribe. Share this with one of your friends. Hopefully they'll get something out of it. Tell me who told you about it. I see Kim over there. What's going on, Kim? I see Here to Learn and Share. I said that before. My bad. Welcome back. Welcome back, welcome back, welcome back. It's simple, MR. You hear me? Welcome back. Who we got in the Zoom, man? Who hanging out with me in the Zoom? I see Jim over there. I see Yolanda over there. I see Steve over there. Zoom Slack. You've been here since the very beginning. Man, stop playing with me, man. Here, learn to share. Has It's Simple MR been here since the very beginning? He'll learn to share, know everything. If He'll learn to share say you've been here from the beginning, then I'll accept that. I'm just playing. Hey man, I jollifies It's Simple MR, man. You be in the back not talking. You got to speak. You got to, you know what I'm saying? You got to speak. You got to stop chilling in the cut. This is a live, interactive platform for a reason. Because I like to talk to people. I want to converse. I don't want y'all just come to the YouTube channel and look at a pre-recorded video and you can't ask no questions and you don't get no kind of help and assistance with the little nuances that, man, looking at price action, you can ask anybody. I don't care if you trade ICT concepts or anything. The little nuances that you have to be aware of to actually interact with price action live. Don't nobody tell you about that. Only thing people tell you about is moving average crossovers, fair value gaps, pivot point breakouts, head and shoulder patterns. All they do is just tell you about the concepts, but they don't tell you about all the little nuances that you need to know what to look out for before you actually press that button. That's why I like doing stuff live, man. So people can say, hey Tim, if you know what I'm saying? You feel me? Now, without further ado, man, let me zoom, get out of the way. Without further ado, man, let me go ahead and share my screen. And we're gonna go over here. As you can see, I was watching Price today. You know, it act like it was gonna shake a little something during the New York session, like you know, after 10 o'clock or so. I was like, oh, we finna shake a little something. And then, you know, once we hit that sell side, it started sending people to the reset line. And that's all it did for the rest of the day. It did that for the rest of the day, sending people to the reset line. Since we ain't hang out with each other yesterday, we're gonna jump to the daily chart and we're gonna look at what price did up until now. Okay. All right. This is today's trading. Why is that showing on there? Get out of here. I hate when stuff be showing on the wrong time frame. All right, so this is today's trading, right? Huge down close candle. Came down here, back to the new week opening gap. All the way down below consequent encroachment of the new week opening gap. Okay? We're down there at the low end of that consolidation that we've been trading in. All right? Now, remember this order block, right? But we wanted this to be used as an order block. Remember, until we offer the opening price of February 3rd, right? This right here is not officially an order block yet, right? But we're looking at this last down close candle to be utilized as an order block on the lower time frames because we have come down into a discount from the high, right? And once we came down to the discount and took out this sell side liquidity, this is the last down close candle that went into that liquidity. And since then, we've been here engineering liquidity and respecting bullish order flow, right? We're still in a sell program, right? but we're in the discount of that sell program, and we've been showing signs of respect and bullish order flow. So we've been watching this February 5th candle. We talked about this for a while. We talked about this February 5th candle being utilized as a bullish order block on the lower time frames, meaning below the daily time frame. So we're looking for this bullish order block. We're looking for daily candle closures above mean threshold. That's how it's showing respect. And then every day that we close at or just below, right, we would immediately close back above, right? Let me show you what I'm saying with the Fibonacci tool. Take your Fibonacci tool, you set it with just 0.5. That's all you need to show, right? You don't need to show nothing else, just 0.5. You can put the 0 and the 1 if you want to, so you can see where it's anchored at, right? You can put those in if you want, right? That's your 1, that's your 0 right there. You can put them in if you want, but I just like to put the 0.5 because that's all I'm looking at. And anytime we close below that 50% of that candle, we immediately close back above. We close very near it, immediately close back above. We close below it, immediately close back above, right? We close below it, immediately close back above. Now, here we are again. We've closed below it again. Now, do we immediately close back above it, or do we come down here trying to extend the bearish dealing range? All right. Do we know? We don't know. Why don't we know? Because we're still inside that area of accumulation, meaning not in the sense of accumulation on the right side of a market maker buy model, accumulation in the fact of accumulating buy stops and sell stops in this consolidation right here. So we're just engineering liquidity. We're still inside that range. Okay. So we still don't have no clear direction on the higher time frame as of to when or if we're going to break outside of this range. Every time we try to leave the range, back in. Tried to leave the range here, took out more liquidity, back in aggressively, right? Still haven't left the range again. Okay. As of right now, this is the highest body. This is the lowest body inside this after making this low, right? Not counting this low, but just after that, the area that's supposed to be respecting this February 5th candle, right? This is your highest body. This is your lowest body, right? And if we, I'll get another Fibonacci tool, right? Go from body to body, right? That's body to body right there. Looking at body to body because the bulk of the volume is in the bodies, the wicks doing the damage, right? So from body to body, we're in a deep discount for the overall range. Matter of fact, let's put this in the 4th grade, right? And if you don't know what putting it in the 4th grade mean, that's just making quadrants, right? And if you don't know how to make quadrants, you just put 0, right? The 0 is your lowest point. Well, if you drag it the way I drag it, right? I'll click it to the highest point and drag it down to the lowest point, right? So if you click it like I do, I click it on the high and drag it to the low because I always want my 75% to be my upper quadrant. That's why I always click on the highest point and drag it to the lowest point, because when I look at it, I want my 75% to be the upper quadrant. If you drag it the opposite way, your 75% gonna be on the bottom. But 0, 25%, 50%, 75%, and 100% or 1, right? So that's your 1, that's your high, 75% upper quadrant or extreme premium, 50% or equilibrium, 25% or extreme discount, and then 0 is the low, right? So you put it in the 4th grade, right? We come down, close below the 25%. Now, this is the highest wick, and this is the lowest wick. We go there, right? We've come back down into a discount of this bearish dealing range right here that we're in. All right, that bearish dealing range right there extended our overall bearish dealing range. So we come here, we started here, right? Came down, made a low, right? Went up, took our buy side liquidity, came down, set relative equal lows, traded back up to a premium of this bearish dealing range, came back down, extended our range, right? So now this is our overall dealing range, right? And this right here is the latest expansion of that range. Tim, what's the importance of the latest expansion of the range? The latest expansion of your current dealing range is the area in which you want to be looking for trading opportunities, right? And where should you be looking for those trading opportunities? What do we call it? What do we call it? Where should you be looking for those trading opportunities? Somebody tell me in the chat, where should you be looking for your trading opportunities inside of your latest expansion leg? Somebody tell me. Somebody tell me. Going once. Going twice.
Repeat it, Tim, repeat. I'm sorry.
Where should we be looking for trading opportunities inside of our latest expansion leg in the dealing range? Where should
in the discount of this bearish dealing range.
It don't matter if it's bullish or bearish. If you're inside the latest dealing range, latest expansion, where should you be looking for the opportunities? What do I call it? What do I call it? If you, this is our dealing range here, where should you be looking for high probability trading opportunities?
Is it the top and bottom 25%?
Yeah, the bus stops. 75, 50, 25. This is where your trading opportunities are going to set. These are your high probability areas that trades are going to set up. That's why I call them the bus stops, because you're sitting at the bus stop waiting on price to come pick you up. And the bulk of your trading opportunities are going to reside in between the upper quadrant and the lower quadrant. Now just think about that. Inside this range here, ever since this range was created from that high down to that low, right? Ever since this day right here, where has price been? Went up to the upper quadrant, came down. So there were some trading opportunities happening there. Went up to the upper quadrant, came down. There were some trading opportunities happening there. Then it came all the way down below the the equilibrium, right? So all of your trading opportunities are going to, well, not all, but the majority of your trading opportunities are going to happen in this region, if you will. And the bus stops are where the highest of the high trading opportunities and PD arrays will form. And time and price is fractal. If you don't believe me, go back and look through price and find it for yourself, and then start to look at it in real time and watch it play out in front of your little eyes. Now, moving right along. So, Wednesday, we opened up, had an inside day. Did not trade outside of the range of Tuesday. Had a complete inside day. Now, Tuesday, we took out Monday's high and created a relative equal high with the weekly high after taking out the weekly low and getting an aggressive, wait a minute. I did not save it inside of my I should have saved that. I'm gonna save that in there right now because I'm not even gonna do it right now because it takes away from it when it's not saved in the right spot, and I got to go find it. But I'm gonna save it inside my used a lot folder right now. Okay. Now I got it saved in my use a lot folder. Right now it's there. When we got our little pie out. All right, so aggressively took off set relative equal highs. That was after we took out the low of last week. Rallied up aggressively up into the high and did not take the high. Hit that rejection block. Dizzy. And just died off. Was dizzy this day, hit the rejection block, kind of an indecision day, inside trading day, right? And then today, all the way down to consequent encroachment of the new week opening gap. All right. So we have set relative equal highs and move back down into a deep discount. Deep discount, right? Because if you look at from this high down to that low, right? That's our latest expansion of the overall dealing range. We traded back up here above the upper quadrant, set relative equal highs at this internal liquidity, because this is the highest high. This is internal liquidity for this overall range, right? And then we died off, came back down into a discount. Anything below that equilibrium right there is in a discount. Anything below this lower quadrant is a deep discount or extreme discount, whatever you want to call it. All right, so we've come back down into a discount and stopped at our weekly new week opening gap, which is a discount anticipatory reactionary point, right? We have a cluster of gaps up here. All right, so we have a cluster of gaps up here. So we have, this is Monday, then we got Tuesday, Wednesday, and Thursday right here. So all the other days of the week, the gaps are there, and then the new week opening gap is down there by itself. So we came from the cluster, right? The cluster didn't draw price into it, right? We opened up, right? Tapped today's new week opening gap, traded up above today's new week opening gap a little bit, and then died off. So the cluster didn't pull price into it. Price drew back down into the new week opening gap, right? And then that's where we are. So now we've engineered liquidity here after sweeping liquidity there. Okay. So now if the algorithm wants this, you want to see it cut through this area like butter and trade into that liquidity that it engineered. Because we got a nice rejection, engineered liquidity, and now we've pulled back to a discount. Tim, what does that mean? All right. That means it came down here into the sell side. Right? Look at it like in the aspect of from day to day. Right? Right. Looking at that high and that low. Took out the low, traded back up, took out the high. Right? That's a Judas swing. Traded back down into a discount. So what would that be? Right? Just look at this right here. Just say you're consolidating all this time. Right? Just say consolidating. You're expanding. You're reversing. You're retracing. Right? So for the bullish sentiment, you will want to see it deliver. Coming back above that liquidity that it engineered, and then further on into higher time frame liquidity, which would be the high of the latest dealing range, which would give us right, a bullish breaking market structure, right? And I'm looking at it like that. Why? Because all of this time while we've been here, price has been respecting bullish order flow, right? So that would continue to show respect of that bullish order flow. Now, if we start to create imbalances to the downside and trade outside of that low right there, then that would be the first time inside this range where we're continuing to respect bearish order flow inside this sell program, right? Inside this sell program. But price has not been willing to do that because it's sitting down here in a discount, and smart money buys in a discount and sells in a premium, right? Now, it can continue down, but if it's going to continue down, it's going to create structure that is going to respect to give the algorithm opportunity to come back up and sell in a premium of a new dealing range, right? But it has to form the structure first so that the algorithm can participate in a sale inside of a premium. Okay? Okay, everybody understand? Good. All right. We're going to jump straight down to a 15-minute time frame and look at Monday and Tuesday alike. Well, Monday and Tuesday together. Over here, this is Monday. I said Monday, Wednesday and Thursday. Over here, this is Wednesday at 10 a.m. Wait a minute. That can't be 10 a.m. Well, maybe it is. Yes, it is. That's 10 a.m. All right. I thought that was going to be, but the news calendar is over here. That's the 8:30 calendar right there. That's the news calendar right there. All right. So, looking at Wednesday, we're just going to focus on the New York time because I got to get out of here. So we're just going to look at the New York time, and we're going to go from New York, and we'll go from the pre-market to the close. So we're going from 7 in the morning to 4 in the evening, right? So we're going from pre-market to close, and we're looking at Wednesday. All right, so here we are on Wednesday. Okay, this is the pre-market here. 7 o'clock to start a pre-market, and then it's mark hour 9:30. So we'll have that. We'll know what 9:30 is. All right, 9:30 open. All right. So at 9:30, let me knock some of this off. So if I want to drop down, wait a minute, what just happened? All right, so this is a 1 minute chart. I just went down to the 1 minute, right? So on the 1 minute chart, this was our 9:30 open right here. This is our 9:30 open there. Move this over to like lunchtime. All right. So 9:30 open here. So this is our pre-market high right there. Pre-market high. Pre-market low. All right. Then, as you see, what price do yesterday? Pretty much did the same thing that it normally does. I ain't gonna say normally, but what it does most of the time. What do we talk about? Let the algorithm establish a range, let it engage with liquidity, and then look for signatures of what it wants to do. All right. And then as y'all can see, I was watching price again yesterday. Right. I was watching price again yesterday. And as you see here, I have this CB right here marked out as my first presentation fair value gap right there. And that would be the 9:43 1 minute candle. All right. And so as price opened at 9:30, right, we went up and engaged with what? The pre-market high. Right. We traded back down below the 9:30 open into a bullish order block, creating relative equal lows. Then we rallied up, right, came back down into a bullish fair value gap right here at 9:52. Right. First of all, use the first presentation to drive down into the discount, into the bullish order block below the 9:30 open, right? And then rally back up, traded back down into a discount, into an imbalance, into a balanced price range below open for a rally up, right? For a rally up. Now, I saw something on Twitter that Michael posted. There was a PD array up here that he was monitoring from over there somewhere. I can't remember what that PD array was. If somebody remember what it is, it was, I think it was like a fair value gap or something. But he was watching for that, and it traded up into that. I can't remember what he said it was, but it traded up into that. So if you was monitoring that same PD array, that would have been a beautiful short right there, because that was pretty much the top of the move. Okay, that was the top of that was the high of the day. I didn't have it on my chart. I wasn't monitoring that, but it went up there into that point there, set the high of the day. Then we came back down to that first presentation, right, into this 958 BSI, right? Got an institutional order flow entry drill on that 958 BSI, but the first presentation did not send us higher, right? So whenever we get to an area of support, right, because this is our first presentation, we're back above it, right? Here it was used as resistance. So when we get back above it, what should it be used as? Support, true support and resistance. When this support fails to take us higher, that's showing weakness right there. So that failure swing right there, right, that could have been a selling opportunity inside this inversion fair value gap as you trade it back up into it. Because when resistance that turned support fails to send us higher, that's a sign of weakness. And when you see a sign of weakness in a premium, at what? At what? Right?
At one of the bus stops.
At a bus stop. Right? So you see that forming at a bus stop. Right?
Y'all thought I was just playing when I said that this stuff be working, man. All right. So we come down, use the reclaimed, right? We got this reclaimed first presentation. We got this inversion, right? So we go up into the inversion, right? Come back up, fail to take out the high, right? And we're still inside there, but right now we're using the inversion. We trade down, get a bearish break in market structure, right? Kiss the new day opening gap from the previous day, trade back up into that imbalance, all right? Also got another inversion fair value gap there, right? That's that first BISI, right? After we came down, we didn't get a turtle soup there, but we traded down into the rejection block. Then we dropped down to the low of the new day opening gap, right? Then we rally all the way back up and come all the way back up to the first presentation. Now, let's go in here. We're gonna chop this off right here on this at this 15-minute candle point, right? Because we want to go back in and study this right here from the higher time frame, because we got a bearish break in market structure, trade back up into a bearish fair value gap, a inversion fair value gap, a bearish breaker. This is a unicorn setup, a bearish breaker inside of a bearish fair value gap, while price is respecting bearish order flow inside of a premium, and it does not send us down, right? That's showing strength. Let's go up to 15-minute right here. Oh, the 15-minute, if we look right here, the 15-minute, right? We got bearish fair value gap there, right? We have an implied fair value gap here with a volume imbalance, right? And then if you look further to the left right there, right? This right here is the first fair value gap leaving outside of this range right here, right? This little consolidation area and expansion up, right? We come back down. This is the first fair value gap leaving that area right there. And then we trade back up into that there. So on the 1 minute time frame, that bearishness that we was showing there, now we see the 15-minute had a reason to come down there, and we went right back to consequent encroachment of that wick right there, right? And for anybody who don't know what an implied fair value gap is, right? See how we got this large expansion candle here, but this wick on candle 1 and this wick on candle 2, they overlap, right? If you come here, create a CE there on that wick, and you come there and create a CE there on that wick, that's your implied fair value gap. And we went up and got an institutional order flow entry drill off of that implied fair value gap. That's too much for you to think about. Just remember, we came up into consequent encroachment of this wick right here, right? You're monitoring that wick right there as we trade back up inside this down close candle. Why you monitor? Go ahead.
Why? You probably said this before. If we displace away from that wick and completely cover it, why is it still considered quote unquote a gap and we monitoring it?
You talking about this wick right here?
Yeah, I understand how wicks are gaps, no problem. But when we cover that down one, I wouldn't have thought to still be considering that, so to speak, a gap in monitoring. Maybe if we were going up that upper half of it, but since we displaced past it and closed below it, why will we still be monitoring it?
because that's the premium PD rate. The PD rates never go stale, and we haven't traded back up into that. This is the first time we're trading back up into that. Like once we created this right here and we drop down, right? As we're coming down, this right here, we're looking for it to act as support, because here it's a discount PD array. So once we trade down and get below it, as we start trading back up, what we was looking to be support, we're now looking to be resistance. This is our first time coming back. The PD arrays never go stale, right? So you always monitor. If price is in the range of a PD array, you're monitoring what price does at that PD array.
So don't look at it as like that was, so to speak, buy side offer that we covered. No, because it's only the bottom end. Okay. So continue to look at it as the PD array.
Don't think about the buy side. It ain't got nothing to do with the buy side or the sell side.
Did you understand what I was going to say?
Yeah, I
Okay.
know what you're talking about. It ain't got
Yeah.
nothing to do with the buy side or sell side. Is if it's a PD array there,
Yeah.
they never go stale. So
Okay.
if
And
you
we
come
never
back, yeah,
tested it. Okay. Got, so to speak. Okay. So it didn't matter about displacing away from it. We never came back to it to test it, to see if it was going to offer the resistance now.
exactly. Because
Okay.
what are we taught? Create it, trade away from it, and retrace back to it. You see what I'm saying? So we got the wick, we trade away from it, and then we're retracing back to it. So especially if we haven't, even if we have traded there before, if it's in that range, you monitor it. But when you haven't traded there at all, you definitely want to monitor it. All right. And then you want to monitor, like, that's why I was giving the examples of everything that's in here. The implied fair value gap, the wick, the volume imbalance, the inversion fair value, the reclaimed fair value gap over here, everything that's in this area. So no matter what PD arrays you're watching, then you know, okay, I need to be monitoring that. Just like here, we displaced away from this SIBI right here, right? We even traded back up through it here. But as we over here engineering this, we're coming back up, we're in that area. So you looking for what price did. You see what I'm saying? The PD arrays never go stale. So no matter what PD array you're monitoring, if there's confluence, you can give the credit to the wick. You can give the credit to the volume imbalance. You can give the credit to the suspension block. Yes, a suspension block here, right? You got a suspension block there. You can give credit to the implied fair value. I ain't gonna mention the suspension block, right? You got a suspension block there too. You give the credit to whatever you want to give it to, as long as it's adhering to algorithmic principles, and they never go stale. All right, never go stale. And so we see that the 15-minute had a reason to go there. I was dropping down because I had just talked about when we saw the support didn't take us higher, and that showed weakness. And then this time we're seeing resistance that's not taking us lower, but we still turned around and went lower. So I was like, let's stop and go study, why didn't this take us lower? Because the higher time frame had a reason to come back up to that premium. Everybody tracking that? Everybody understand that? Right? So here, when this resistance on the 1 minute time frame here, right, let's mark that out. See, these the little nuances that I be talking about. When that resistance right there did not push us down into this low, because we have taken out the buy side, we've got a bearish break in market structure. We retrace back up into a premium of our latest expansion. And when we drop down, we stop at a discount PD array and come back up and get a bullish break in market structure without taking out the sell side. Well, Tim, you said over there when this support didn't take us higher, that showed weakness, and we should have been looking for reasons to sell. But over here, this resistance didn't take us down, so now we should come over here and be looking for reasons to buy. Never. because here the higher time frame had a reason to come back up here. And when the higher time frame gave a reason to come back up here, what did the lower time frame have? Remember over here when we traded up into that inversion fair value gap there and traded up again and didn't take out that high? What is this right here? That's our first presentation, right? Right, we went up, used it as an inversion slightly, came back down, got back below it. So now it should be used as resistance, as a reclaimed fair value gap. As soon as we came back up into the premium for the higher time frame, if we go ahead and put the meat back on the bone, God dog it, Tim. Hate when I do that. Where are we? Right there. Okay. Right here. Yep. Put the meat back on the bone at 11 o'clock. Right. We open up there. I mean, we close there. Right. At 11 o'clock, we open here. We rally up. Right. Stop just short of it. Open up the next candle. Pop in. Fail to hit consequent encroachment. Break down. Take out liquidity, bearish breaking market structure on the lower time frame, trade back up into the bearish order block, right? And then down we go. Taking out liquidity again. What do? Trade back up into the fair value gap right there. Left the breakaway gap there, left the breakaway gap there, left all that, trade back up into the fair value gap there, right? Then we come down into the sell side liquidity after taking out the pre-market high. Right. So like we say, let it establish a range, pre-market high, pre-market low, right? Let it engage. After 9:30, it engaged with the buy side, went up there. Like Michael said, it went to a PD array that he was monitoring, waiting for price to come back to. Right, he took a short from up there from the high of the day somewhere off of something over there. Right, then once we came down, even if you wasn't watching that, we came back down, got a bearish break in market structure, showing a high probability of wanting to go back to the sell side. Right, came back up into a premium, into the first presentation, into a bearish order block. Right, broke down and delivered to the sell side liquidity, aka consolidation, expansion, reversal, retracement, delivery, or CERRD, also known as AMD. Right, we open here, accumulation, manipulation, distribution, power of 3. I don't know about y'all, man, but golly. And they say it ain't no algorithm. They say people who trade ICT concepts can't trade. They say people that trade ICT concepts are stupid. Stupid. See what I was talking about here? Right? After 10 o'clock, started looking like it was about to shake something. Right there. Once we delivered down, as you can see, I had some sell side marked out there. It said, if you can't read what that says, it says sell side regular trading hours from 3/9/26. The 9th would have been Monday. Yes, Monday. Right? So if you look here. Y'all hold on for a second. What's up, Pumpkin? Hey, live, mama said, say hey, mama.
Hey, live, how y'all doing? Hey.
And my auntie, my mom said, hey, if y'all can't hear, that's cause she got a cheap cell phone.
I got an Apple. Be calling them cheap if it don't work. Oh, okay. They be telling they need to replace hers all the time.
I'm sorry, y'all. I'm helping my mama find something. Y'all talk amongst yourselves, man. Y'all talk amongst yourselves. Somebody in Zoom say hey to my mama so she can hear y'all. So she know I ain't making it up. Somebody better say hey to my mama.
Hey, Miss Tim, Mama. Mr. Tim's mama, how are you?
Good.
Appreciate you sharing your son with.
Oh, yeah. Anytime. I know he keep y'all entertained.
Who, me?
You definitely raised a comedian.
Yeah. Tim, you're gonna have to tell us about that later.
I see that, cause y'all done sent me down a rabbit hole.
All right, nephew.
Y'all done sent me down a hole.
Go down it later, and you take care live. You're gonna be like, oh yeah,
right.
now remember?
Yeah, I'm gonna be on my Betty Right. I'll be like, oh yeah. All right, love y'all. Talk to y'all later.
Love you too, brother. Talk to you later.
They done sent me down a rabbit hole. I can't remember what I was talking about now. What was I saying? Oh yeah. After 10, like I had this when you look here, now today was more of like a trend day to the once it engaged with the liquidity. All right. Every day it ain't gonna give you that full reversal, okay? Because as you see here, this is our pre-market high, right? And remember what we said: the cluster of gaps is up here. This is the cluster of new day opening gaps, right? This is our cluster of new day opening gaps up here, right? This is our that's our pre-market buy side from yesterday, right? And I just noticed that's our pre-market sell side from yesterday. Man, I just noticed that because I didn't have yesterday's pre-market. I'm seeing this in real time with y'all, right? This is our pre-market sell side from yesterday, right? So what does that mean? This is our daily open right here. So peep this. I'm seeing this in real time with y'all because I got the levels on the chart right now. This how my mind click when I'm watching price during the daytime, right? So, and I wish I was recording this because this would be a mean gem from the live probably, right? So we open up here and we drop down below this pre-market sell side, all right? We do around, okay? And then when we come into pre-market this time, right? We come to pre-market this time, We trade back up above that sell side. Now, what do we get when we traded below this pre-market sell side? We're pretty much getting a break in market structure here. Rally up, took out the buy side, came down, took out the sell side. That gave us a break in market structure. They gave us a bearish Judas swing. So now we do, right? Now envision, this is your session. This is your session. This is just some dead zone, right? Now we come back into the same dispensation of time. You can see it with the highlighting, right? Now we come back up to that break in market structure, which would be a bearish breaker, right? And then we drop, right? So we have created it, traded away from it, and traded back to it. So we trade back into the breaker. That's your short right there. So now when we, right, create our pre-market high today, we were trading back up into that bearish breaker. And we also swept a short-term high right there. Because if I put on my crosshairs, we can see right there that we came above the London high. So we took out a previous session high, traded back up into a previous New York session PD array, our breaker, traded back up into our breaker where we broke structure and then we broke down. So now the damage has been done. There's no reason, right, once we take this sell side to go back up there, because that would invalidate our sell program that we're currently in. If we trade back above that high, that invalidates this sell program that we are continuing in. So that's why when we, on this day, when we attack, we didn't even attack the pre-market buy side. We came down and we attacked the pre-market sell side after 9:30 here, right? 9:30 we open up, we attack the pre-market sell side. And since we're in a sell program that we don't want to see violated, this attack of this sell side, what should we be looking for that to become? A wig snatcher. Because we come here. Why do we want to be a wig snatcher? Because we haven't taken any liquidity. Because notice on this 9:30 candle when we popped up. Now, I didn't notice all of this over here. This is the part that I noticed when I was trading, right? When we dropped down into this right here, we didn't take out that high. When we shot up, we created relative equal highs and we immediately came down and took out that low. So now I'm looking at this right here as this is the start of the wig snatcher, because we didn't take any liquidity. And if we bearish, I want to see it take some buy side liquidity first, right? So we rally back up, take the liquidity, trade up into the fair value gap, and then drop down, giving us our wig snatcher. Then we trade back up, right, into the fair value gap, and we drop down and create the morning session low. I mean, the opening range low. So now you got the opening range high, the opening range low. Okay, so we come down, right? We're failing to get back above this balanced price range, right? So when we drop down and engage with the opening range low, I'm not looking for it to come back to the opening range high, because we never came back to the pre-market high, and we still haven't taken the sell side liquidity, right, that I have marked out based off the regular trading hours. If I switch back there, right, that sell side liquidity right there. If we squanch up the chart, right, and we're trading over here, that's your sell side. That price is drawing down too, because we had a massive gap down, refused to trade back up, then we dropped down, took out that sell side, right? That's your sell side you're looking for price to draw into. Okay, and then after dropping down and touching it, we rallied back up and start sending people to the reset line for the rest of the day. That's all I got, man. Anybody got anything for me? I really wish I would have been recording that, because when I seen that, I was like, oh my goodness. If y'all ain't getting nothing out of that, hey, I'm sorry, man. But if you did get something out of that, drop one of Clues bombs for that gem. Man, that was extra loud. I hope I ain't blow y'all ears away, because I think it came through the microphone and everything. Anybody got anything for me? What's up? Seen Felicia pop up in here. What's going on, Felicia? All right, man. I'm about to go ahead and get back at it. Working in my bathroom. Y'all do me a favor, man. Hit a like for the algorithm. And if you're not subscribed to the channel, what is you doing, man? What is you doing? Is there anybody anybody that's tapped in that's still unsure if this stuff work or not? Anybody that's still unsure if there's an algorithm? Is there anybody? I mean, no shade no, I have no issue with anybody who don't believe, but man, how can you not? Gang, tomorrow is Friday, so we got pre-market analysis. I should be good on the pre-market analysis tomorrow, because my son got to be to school at 8 o'clock because they got a field trip they're going on. So, shouldn't have no issues with checking in at 9. So, I'll see y'all tomorrow at 9 for the pre-market analysis. If you're not a part of the gang, and you would like to be a part of the gang, there should be a link in the description below. I think it's like the second link. It says join the Discord or join something, right? It's $50 a month. Pull up, come hang out with us. I'll see y'all tomorrow, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. I just mean Big Spot if you know how I blow it, man. Yo, y'all be safe. I hang these trading streets, man. Gone.